Hello, guys. My name is Daniel, and I first would like to thank you guys for joining the idea. I did not think people would um, gravitate around that, but seeing you guys here shows that there are some people who are interested in it. So shout out to you guys for joining in. Like I said, we are only here to help each other. There is no gurus in there. No gurus allowed. If you feel like you know more than anybody else, please get the fuck out. We are all students here. Like I said earlier, like I said in the comments, if it really made me feel like university again, where we can just be a big ass study group where we can help each other, whatever questions we have. Even me, I'm looking for help. I'm going to improve with you guys being here, and help each other, find some answers together, at least until the tutors and the professor, comes uploads a new video to answer some of the questions that we have by himself. So starting there, I'm making this video for Icy or Easy. I hope I pronounce your name right. I don't want to be wrong, and I don't want to dissect your name in today's culture where everyone is sensitive about how things are being done. So I hope I pronounce your name right by say Icy. And if I'm wrong, please feel free to correct me. So this video is for Icy, who said, hey everyone, I'm still trying to understand the ICT concept. I'm always lost as per the directional bias. Does the concept work with the overall trend, or what exactly is it? Mike never talks about this, or am I wrong? Well, you're kind of right or wrong. And big ups to Boca as well, who pointed something out that I wouldn't have thought of, if I'm being honest. He said that you should go and watch this video, Keys to the Daily Bias in the Forex Market. This will really help you. However, there are two more videos in which you will find, answers, because, from ICT's perspective, essential to trading the daily bias, especially this video. Absolutely amazing video. I remember I watched this so many times as well. And there is the weekly bias. Now, me personally, I don't use this, but it's if for more information or for more insight on how ICT looks at the weekly and daily biases, please feel free to read it, and feel free to watch it and come back to this video. Now, obviously, that is assuming you haven't watched these videos yet. If you have, then let's carry on with the video, right? So your other question that I want to start with is, does the concept work with the overall trend? This terminology, or this word, these two words, overall trend, is not something that I feel like it's a term where you can get lost in pretty quick, because I trade the futures market. That's my house. That's where I'm comfortable. I don't trade forex. So when you talk about overall trend, in my head, I look at it like S&P is a forever bullish market. So what do you mean overall trend? The forever trend on S&P is bullish. So to me, calling things the overall trend is a little bit weird, because you have to set yourself, for you to determine your trend. Okay, let me rephrase that. None of us here are, how can I say this, market makers, traders. We don't hold huge capitals to trade in the market. None of us is going to take a trade in 2022 and close it in 2050. So when you talk about overall trend, you talk about an entire market order flow on the vast longer term. That there is no point in that. Us retail traders, because all of us, we are retail traders, we are likely going to hold a trade max for like 2 days, 3 days. The max I've ever done is 3 days. So I don't talk about overall trend. However, when I talk about trend, I have a specific timeline and range that I look at that will give me the trend that I want to, that will give me, in which I'm going to find my directional bias. My directional bias, for the most part, is always midterm. It's never long term. It's like, okay, what is the market what's the direction of the order flow for the next, let's say, 2 weeks? What is it likely to be? Or for the next 2 days or 3 days or 4 days, all right? Or for the next week only, all right? I don't talk about overall trend, because the connotation of that word in my head means like over a whole lot, a long-term period. It's a huge timeline, like a 1-year timeline. So that is the first thing that I wanted to point out. And what exactly is it? Well, to start off, to explain to you what my understanding of the directional bias is. And obviously, if anyone in here feels like correcting me if I'm wrong, you know, please drop your criticism, as long as it's constructive, and we are here to help each other. Like I said, I'm not a guru myself, I'm just helping. And I feel like since I created the channel, I should, you know, start the dance. So feel free to correct me. Like I said, let's help each other. So to start with, for you to understand directional bias, or to have your directional bias, you need a basic understanding of market structure. All right. And what I mean by basic understanding of market structure is that you should be able to know this basic higher highs and higher lows. All right. So what happened is I did this drawing on a previous video, because this is the second time I'm recording this video. The first time the microphone was not on. So I'm going to delete this and draw it one more time. So here we have higher high, lower high, lower lows, lower high, lower lows, lower high, lower lows. This basic market structure on a higher time frame can give you your directional bias, but you have to know what to look for. When it comes to ICT concepts or ICT way of trading, there is one thing that sits behind everything ICT has been teaching us so far, and that one thing is this right here, the swing. All right, I call it the mother swing. I will explain why I call it the mother swing. But this candlestick pattern, when I was studying it, I called it the mother swing, and all of it represent initiative candles. Basically, why is this so important? It's because this represent the turning points of the market. I said earlier, you have to understand basic market structure. What the thing is, this candlestick patterns, well, actually, let me just bring this here. Can I do that? What the hell? Ah, that's not what I wanted to do. Fucked up. Okay, go back to this. Okay, so basically that pattern, if I can just get that on screen for what I'm trying to show. Okay, this basic pattern, or this I meant to say candlestick pattern, its importance resides in the fact that it shows the market turning points. Which means what? Which means at every level of the market structure, you will find it. You'll find it here. You will find it here. You'll find it here. You'll find it here. I mean, thus far you get the point, right? You'll find it at every turning point of the market trend or the market structure. Okay, every turning point, like from higher time frame all the way down to the 1 second time frame, you will find this at every single turning point. Okay, one way or another. So how do you use this now to identify your daily bias or your directional bias, right? The way I understood it, or the way I've been doing it since I've understood it the way I understood it, is this. So let's go on a higher time frame for a second, right? And let's stick to market structure for the time being, because that's what it's all about, really, if I'm being honest. When you look at the S&P, because like I said earlier, that's all I trade, futures, right? S&P, NASDAQ, US 30, so on and so forth. So when you look at this structure, earlier I said that I don't talk about overall trend. I only look at a range, a trend, a specific range, or the specific trend of a specific range, and within that range, from a weekly chart, I can identify what the next week or the next couple of days are going to be like. So on this chart, the range that I'm looking at is this entire range right here. You see this? I can't really put a drawing on there because there's already so many drawings on my chart, but please follow my mouse. This entire range here. Okay, this is what I'm looking at. So what do I see here? Let's start with market structure. Higher high, lower low, lower high, lower low. All right, and then higher high, higher high, lower low, lower high, lower low. Okay, now remember this pattern. Okay, this candlestick pattern, I told you, this is the crux of everything ICT. This is where it starts. I'm not joking. When I realized that, it was mind blowing, but this is where everything starts. And I think you will find it in the video essential to the daily bias. I think, wait, actually, not this video. I think it's in this video. I'm sure it's in this video. I don't remember well. I've watched so many videos from ICT, but anyway, yeah. So pay attention to this candlestick pattern. Look at the higher high, this higher high. What do you see? Swing. Look at the lower low. What do you see? Swing. 3 candlestick pattern. Let me just show it again so that you can see it properly. I see. I think you can see it. I hope you can see it. So lower low gives you the swing. This lower high gives you a swing as well. And then this lower low gives you another swing again. Like this pattern, you will see it as soon as soon as someone points the finger at it, you're going to see it every fucking where. All right. However, it only counts when a structure has been broken. Earlier, I was calling it the mother swing. All right. I said that I call it the mother swing instead of the swing. And here's why. The reason why I call it the mother swing is because it's the head that starts the movement. In this 3 candles pattern, the third candle, ICT likes to call it displacement. And from my understanding of the word displacement, when I analyzed the market, or the fact that I'm so used at looking at it, I ended up realizing that, in fact, that word only means, to me, unless I'm wrong, please correct me, guys, if you think I'm wrong, but all it means is incoming volume. That's it. Huge income of volume, huge incoming volume. That's what that displacement is on the third candle. And the importance of this displacement is what it has to take out the middle candle. All right. There is ICT describes these candles in a better way, where he goes, the left candle has to be shorter than the second candle, and then the last candle has to be shorter than the middle candle. He says something along those lines. I could be saying it wrong. So just so guys, you don't, punish me or insult me for saying bullshit. I'm paraphrasing what he said. Okay. So the left candle lower than the middle candle, and the right candle shorter than the middle candle. Okay. But when it comes to displacement, and this is something that ICT haven't said explicitly, but when it comes, well, at least I don't remember him saying that, but when it comes to displacement, this last candle has to eat out this candle. It has to take out this low. This right, sometimes it doesn't take it out, and then the market resumes to the downside, and sometimes it doesn't take it out and the market just completely reverse, and you realize that this was a fake out. Okay. But 85% of the time, when you see this happening, the market will continue in the direction of the last candle, the displacement candle. Okay. If you think about the 2-minute chart, even if you think about the video, I think it's video 13 or 16, ICT talks about it. Anyway, so when you look at this, right, you have the swing here. What is this candle? Third candle. Is this a displacement? No. However, we took out 2 days worth of lows. All right. So it is worth considering as a displacement. Did I consider it as a displacement on that day? Honestly, I didn't. And I got stopped out pretty heavy because I thought it was going to be a fake out. Okay. What I was looking at, it was this instead, unfortunately. But it is what it is. I got stopped out on this move. However, when you look at this one, same thing, swing to the downside. Swing low. We go up. We take out this high. So it's fair for you to assume, soon as you see the third candle taking out this middle candle, it's completely fair for you to assume that the direction of the next candle is likely to be bullish. Now, there are some other little things that I noticed about, when I was doing my back testing that kind of canceled that argument. Not really canceled that argument, but makes that argument, make it so that you have to thread with that argument very carefully. Like in this specific example, it's not the best example, but it's a good example. Why? This displacement failed. It's obvious because we went all the way up in volume and we retraced more than 50% of the candle. This is a big alert that the intention to go up has changed. Now, does it cancel the fact that you are going to have a bullish movement? No, it doesn't, because guess what? You had the bullish movement to the upside. But what I did was I was only looking for a bullish move to the 50% of this huge candle, of this displacement or failed displacement candle, before going to the downside. So those are little ways in which you can alter your directional bias, where you look at this and you're like, okay, this failed. I am not sure exactly what the direction is, but I think we could be bullish, and I think we could be bearish. Whatever the case may be, I think the market is at least going to reach the 50% of this candle to try to find something there and see if we can find, more sellers or more buyers or whatnot, etc., etc., etc. Now, when you look at, let me find a more perfect example. Maybe this trend is not the best example. Let's look at this one. See this one right here. Perfect candlestick pattern. The third candle displaced, took out the middle candle, took out the left candle without even thinking your directional bias is bullish. Without even thinking, your directional bias is bullish. Now, as per ICT, once you see this, all you have to remember is that you are not predicting the market. You only give yourself a sense of direction of where the order flow is trying to go next. All right. Once you get that sense, all you need to do is find an entry point or a zone or an area in within this displacement that will say, I will confirm to you that, oh yeah, if the market taps at this level, this might be the point where we're going to resume bullish. And that area is what ICT calls the fair value gap, I guess. And sometimes it's different, sometimes it's just the order block, depending on how the market delivered price or whatnot. So that's pretty much what the how you can come up with the daily bias. Now, just as an example, I'm going to show you my weekly analysis on S&P on how I determine my weekly bias. So this is on a weekly chart. Okay, like I said, I was looking at this range. We are bearish and blah blah blah, and then we had this swing, this mother swing, but it was never taken out. This mother swing happened, this bullish move happened, and then what happened after that? We took out this, but I couldn't see this clearly on the weekly chart, so I dropped down to the daily chart, and I saw it even clearly. You can see I even put some little lipstick on there. And just so you know, just to prove to you that I did not make the analysis just for the sake of the video, this is something I did on Monday, the 4th of April. That was Monday. We are the 6th. I think that was Sunday, actually. I don't know. Monday? Yeah. Anyway, that was the 4th of April at 4 in the morning that I made this
So we are
analysis.
Monday, the 4th of April. This is the first month of the second quarter.
Yeah, whatever. So when I made this analysis, I went on a daily. It was clear to me the direction of the, what would be the direction of the direction of the market, or the directional bias. Why? We took out these highs. Okay. Now let's talk about the importance of this in the market, as the market is live. This is very important when we grab liquidity. If we grab liquidity like here, and the displacement, or a displacement happens after that in huge volume, then again, another way of confirming that the market, the directional bias will be in the direction of the displacement. All you have to do is look back in time, or look behind or inside of that displacement, find a point of entry to go in that direction. Okay. And by the way, grab of liquidity, I used to struggle with it, just in case you are struggling with it as well. earlier I said all you have to understand is basic market structure. Grab of liquidity is nothing but break of structure. That's just it. I'm not trying to oversimplify ICT teachings. That's not what I'm doing. But again, as per my understanding, that's all it is. You break market structure, you grab liquidity, and you turn around. That's just what it is. And this is going down like I thought. Wait, let me just check the 30-minute chart. Oh my days. Yo, I had a partial here. Damn. Well, that's a good trade. That's a definitely good trade. So I've been in this trade since, was it yesterday? Yeah, since yesterday. So I hope it's going to end tonight. Like I can close my fucking position because I've been there too long. But yeah, going back to what I was saying. Sorry, I got distracted a little bit. I was not expecting the move down. On a daily, what do you see? Break of market structure. You have what? The swing. Now, is this necessarily the swing that I would wait for, that I would expect would expect from ICT teachings? No, because again, the middle candle is not above the left candle. Okay? The middle candle is inside. However, why did I use this as my my bearish directional bias confirmation? It's just because we grabbed the liquidity and we came back inside of the range of that liquidity, inside of this range, this range right here. We came back inside of this range with massive impulse. The displacement was crazy. So in my head was like, look at this. Look at how strong this candle is. Ain't no fucking way this market, leaves without at least tapping further down or looking further down into the market. There are some other confluences that I had, related to auction market theory as well, but we're just going to stick to ICT concepts. So got the displacement, and from the daily I could already see the fair value gap. Okay, so somewhere in this fair value gap I was waiting for my trade. Drop down to the 1 hour, just like ICT does, is in that fair value gap we had I think it was this area and this area. Somewhere in between here was where my trade was supposed to be. So I identify this area because when you look at the advanced market structure of the market, you have this swing low being taken out here. We went back up to test the imbalance residing here. We dropped, and what's left testing this level right here. So that's where I was waiting for my trade. Simple, just pure ICT stuff. So I hope that makes sense as far as daily bias. If it doesn't, and if there are people not agreeing with the way I explained it and have a better way to explain to IC how they do their directional bias or how they come up with their directional bias, then please feel free to drop a comment or something like that. But that's about it. I hope it helped, IC. If you have any more questions, feel free to ask. I'll be happy to answer if I have the answer, or anybody else will be happy to answer. Trade carefully.